Namaste to all. Here we are with a new video relating to the accounting for leases. As per Ind AS 116, we are going to discuss lease accounting. And in the last video, we have discussed about the accounting in the books of lessee. Initial recognition we have done. Now in this video, we are going to discuss about subsequent recognition. I will tell one small example. With that you can understand what we are going to do. Okay, suppose there are two parties under the lease, say A and B. Okay, A and B, two parties are there. A has taken a asset, say a building, consider it as building. This building has been taken by whom? By A on lease for say 3 years. How many years? 3 years. So the person who has taken the asset on lease is called lessee, and the person who allowed to use the asset, who gave the right of use of asset to B is called as lessor, and the contract is called lease. And for this we need to account in the books of lessor and lessee. First we are discussing in the books of lessee. So till the end of this video you assume yourself as lessee and how it will be done. Suppose each year at the end of each year, 1 2 3 years, so first year end, second year end, third year end, so at the end of each year, first year end, second year end, third year end, lessee A is paying say rupees 50,000. Okay, 50,000 as payment. This is called lease payments, and whatever 3 years is there, that is lease term, and this building is leased asset. Okay, leased asset. So this leased asset value on the commencement of lease, okay, when asset is transferred, right to use on asset is transferred to A from B, that is called as commencement date. On the commencement date, in the books of lessee, in the books of A, value will be measured and recorded. Recognition we call it is measurement, and recording will be done on the commencement date, that is called as initial recognition. What it is called as initial recognition, that we have done in the previous video. I'll give a quick recap of that also. And at the end of each year, okay, when he is paying 50,000, first year, second year, third year, at the end of each year it will be recorded in the books of lessee as what we call it as subsequent recognition. So subsequent recognition, this we are going to discuss in detail in this video, how it will be measured. Suppose each year is paying 1,50,000, 50,000. At the end of each year is recording in the beginning itself. So we consider present value of lease payments. What payments? Present values. Suppose rate, discount rate is 10% per annum. So this 50,000 which will be paid at the end of first year, at recorded initially at present value of present value first year end, second year end, first year end, first year end, second year end, third year end, whatever values are there na, those will be recorded as subsequent recognition, but initially with discounted value. So initial recognition at 10% discount will be valued initially and recorded in the books. 50,000 with 10% discount will be recorded in at the commencement date, at this date itself, with 10, these 1,50,000 whatever payment is there will be recorded as initial recognition. Okay, how it will be done means, at present value of lease payments, first year, second year, first year, how many years is there, those many years. First year whatever lease payments are there, those lease payments, suppose here it is first year, say first year, second year, third year, like this. Lease payments 50,000 is there, those 50,000, 50,000, another 50,000 with whatever discount factor 0.952 or 0.95907, like this, whatever discount factors will be there will be multiplied and taken in the books. So initially what lessee is getting, right to use an asset, that value, to that extent he has to pay liability, that is lease liability. That lease liability, one asset value, one liability value recognized in the books, that is called initial recognition. That is called initial recognition. Hope you have understood till here. With the example we have discussed in the previous class, I will give a quick recap of this now. So let us see those things now. So first, initial recognition, working note 1 we will do present value of lease payments, year and lease payments, discount factor 10%, 5%, whatever will be there. Value we will get as present value of asset, and one more working note we will take, lease payments, then working note 2, right to use asset. Okay, that is will be like the statement. Example, memory technique, LIC लेना चाहिए डॉक्टर के पास जा रहे तो, क्योंकि आजकल एक्सपेंडिचर ज़्यादा हो रहा. So L for lease payment at present value, that you have done in working note 1. Initial direct cost if any, I for initial direct cost if any, that will be taken, that is commission, stamp duty value, etc. C for commencement, before commencement if any advance payment is made, that value, and provision for dismantling and restoration cost. Okay, that if any dismantling charges or restoration of asset as it is, that provision will be made. So LIC लेना है डॉक्टर के पास जा रहे तो ये एक है राइट ऑफ यूज ऑफ असेट वैल्यू. This is we have discussed earlier in the previous video. Next, journal entry on the commencement date, right of use of asset account to lease liability to bank. This includes initial direct cost and any advance payment. Those two will be credited along with the lease liability, and provision for dismantling and restoration cost. All this together you will get as right to use asset account. So these are the things we need to consider in the initial recognition. So quick revision for of previous class we have done. Now today's class is about subsequent recognition, that is at the end of first year, at the end of second year, at the end of third year, how it will be recorded. So subsequent recognition is very important from the exam point of view. So total recognition is important, but for your understanding purpose we are making it subsequent recognition and initial recognition, but as a whole problem we need to do in the end. So working note 3 will be lease liability. Suppose in the earlier example, every year I am paying uh, 50,000 as lease liability. Suppose my present values are 1,20,000, 1,20,000 after discounting. Present value of lease liability or right of use of asset is how much? 1,20,000. This 1,20,000 will be spread over 3 years. How it will be spread over 3 years period? We are going to make a table called lease liability table. Each year value we need to calculate and take it, because this 1,20,000 may include interest also. So this will be spread over at the end of first year, second year and third year. 3 years period we need to spread over. So how it will be done, let us see. So lease liability will be spread over 3 years. That 3 years, how it will be? Opening value. Acha, here one more thing. If lease rentals are paid at the end of year, फर्स्ट ईयर एंड में पे कर रहे, सेकंड ईयर एंड में पे कर रहे, थर्ड ईयर एंड में, at the end of the period if you are paying, your lease liability table will be like this. First column is year, second column opening balance. On opening balance, whatever your discount rate is there, that interest, that is A, is your opening balance A. Interest column B, and C, lease payments. Every year I am paying how much? 50,000 I said. So that 50,000 whatever I am paying, that will be considered here lease payments as C. And from the lease liability, if you deduct the lease payments, last column will be closing balance. I'll tell once again. First column, consider it as A, second column B, third column C, D. First opening balance. On opening balance we need to calculate interest. Okay, from opening balance plus interest we need to deduct lease payments. Every year cash payment whatever we are doing, that we need to deduct, then we will get closing balance. A plus B minus C. Okay, closing balance you will get. This is what? Lease liability table at the end of the period. If same is, if lease rentals are paid at the beginning, not at the end of the year, it is paid at the beginning, then small change will be there in the our table, lease liability table. That is first column year, second column opening balance plus uh, okay, opening, you may consider it as This as before lease payments, opening balance before, then opening balance after. This is before LP. Okay, from that we need to deduct lease payments every year whatever we are paying. Then you will get opening balance after lease payments. Opening balance before lease payments minus lease payments. Opening balance after lease payments, that is A minus B, C. Then on this closing balance, whatever, sorry, after lease payments, whatever value is there, on that we need to calculate interest rate. Okay, D. If you add opening balance after lease payments plus interest, you will get closing balance E. I repeat, first opening balance before lease payments less B lease payments. C will be opening balance after lease payments. On C, if you calculate interest, some rate will be given in the question. That rate we will take interest from O to that C, that is opening balance after lease payments. We need to add interest, then you will get closing balance. Okay, so like this, how many years lease term will be there? Each year we need to spread over the values. If it is before sorry, if it is at the beginning, we will do as per this table. If it is at the end of the period, we will do as per this table. If it is at the beginning, we will do this table, because on the opening balance interest we need to pay, okay, before paying the lease payments. Here lease payments are paid at the end, so your opening balance includes lease payment also. Here from opening balance, suppose your opening balance is 2 lakhs. Okay, each year you are paying 50,000. First beginning itself you are paying 50,000. That will be deducted first of all. Be calculated. On the balance, interest will be calculated. First calculated, interest will be calculated before lease payments. Okay, that is how it will be. So 50,000 I will deduct first, because lease rentals are paid at the beginning. So balance on 1,50,000 I will calculate interest. Whereas in case of lease rentals are paid at the end, on the opening balance 2 lakh itself I will calculate the interest first, then after adding these two we will deduct the lease payments, and you will get the closing balance. Here interest will be added at the end and closing balance you will get, because this interest will be paid in the next year. Okay, hope you have understood. At the end means A table, at the beginning means B table. Please understand this concept. This is about lease liability table. Next we need to take further, that is one more working note we need to do, that is right of use of asset account. Right of use of asset account. This is working note 4. Year opening balance. Year opening balance. From opening balance you need to deduct depreciation, closing balance. Like this, how many years of leased asset will be there? That are lease period, whichever is there, on the basis of that we will take. Okay, whichever is lesser, that one we will take. Suppose asset is purchased, option is given to lessee, then we will take the useful life of asset for the depreciation purpose. This we have already discussed. Okay, Okay, if question is silent, use which method? Straight line method. Period of depreciation will be if lessee is certain to exercise the purchase option. Yes, then depreciation will be over the useful life of asset. If asset is not exercised or automatically not transferred to lessee, then it is will be no depreciation will be over the lease term. We will take on the lease term. This is what calculation of depreciation, working note 5. This depreciation whatever we will get will be used in the working note 4. Here whatever depreciation value we will get in 5 will be used in the working note 4. So whatever period, please understand that. Okay, with the help of, but you need to know the, but we need to know the uh, formats first. If you know the format, half of the problem will be done there itself. So depreciation whatever we have calculated will be taken here. So depreciation will be under straight line method. Under which method? Straight line method. And if assessee exercise the option or automatically less ownership will be transferred to lessee, then we need to take the useful life, otherwise lease term will be taken for denomination for calculating the depreciation of the leased asset. Hope till here no doubts. If there is any doubt, just go back to the video, and I'm going very slow because this is important and I don't want to uh, explain again and again. So that is why I am going very slow. If anyone wants to speed up, then they can increase the speed because it is YouTube video. You can do your wish, and those who are not understanding with my speed, they can lower the speed and can understand the things. Okay, so general entries, we need to do the general entries for subsequent recognition. So for subsequent recognition, general entries, so first date column will be there, then particulars. If date is not given, we will write number, debit amount, credit amount. General pro forma you all know. Initial recognition is already over, that is here we are. Initial recognition general entry I will show you. This will be at the commencement date. Okay, at the commencement date this general entry will be recorded. Right of use of asset account to lease liability to bank for the initial direct cost or any advance payment, to provision for dismantling or reconstruction restoration cost. Okay, this is first entry, but at the end of first year we need to write general entries. At the end of second year we need to write the general entries. For that purpose these general entries are there. So interest for first year, wait a minute. So interest is the expenditure to lessee. So interest account debit to lease liability. With the interest, lease liability will be increased. So interest account to lease liability account being interest accrued. Then second lease liability account debit to bank when at the end of the second year uh, you are making the payment. So being payment made towards the lease liability, interest account to lease liability to bank. This is the amount we are paying under the lease term. नेक्स्ट डिप्रिसिएशन ऑन दी असेट, एक ईयर पूरा यूज कर लिए असेट को तो उसके ऊपर डिप्रिसिएशन रहेगा. सो डिप्रिसिएशन इज एक्सपेंडिचर टू लेसी, डिप्रिसिएशन अकाउंट डेबिट टू राइट टू यूज असेट अकाउंट that general entry being depreciation charged. Next, these expenses whatever are there, interest and depreciation will be transferred to P&L account or charged to P&L account. So profit and loss account debit to interest account to depreciation to interest account to depreciation account. I repeat, at the end of the interest and depreciation or expenditure are there, that will be transferred to P&L account in the books of lessee. So profit and loss account debit to interest account to depreciation being expenses transferred to P&L account. Amount credit वाला credit में, debit वाला debit में. So I repeat once again for your convenience. First, for the purpose of interest, wait a minute. For the purpose of interest, interest account debit to lease liability account. So credit में lease liability, then lease liability to bank account. So amount will be recorded here on the credit and debit. Whatever we are paying lease payments every year, that will come here. Next, depreciation on leased asset, depreciation to right to use account. So debit and credit. Next, whatever expenses are there, that is interest and depreciation. So P&L account debit to interest and to depreciation to interest. These two amounts will be tallied with this amount, will be transferred to P&L account. Here and like this, how many years are there lease term? In the example I said 3 years na. So each year end same general entries will be followed. Same general entries we need to write for 3 years. Okay. So hope you have understood. At the beginning or at the end, based on that, wait a minute, at the beginning or at the end, lease liability table will change. Okay, remaining things will be same itself. So I don't want to waste further more time. Let us go with a question, it better. Okay, this 27 वाला हल कर रहे थे अपन, 28 also we did, 29 we did. So now we are doing a new question number 29 and till 29 we have discussed in the previous video. If anyone doesn't saw previous video, first see that video before this. And one thing I want to tell you all, you might have received the information regarding the timetable relating to your exams also. So please watch the whatever videos are there. I don't want to drag the syllabus, that is why I made the video also, because due to some unavoidable reasons we couldn't have the class, offline class. So question number 30 we are dealing. Entity ABC is lessee. They are saying enters into 3 years lease of equipment. Entity ABC agrees to make following annual payments at end of each year. Oh, अच्छा यहाँ पे who is lessee? ABC is lessee. They said how many years? 3 years lease term. Okay, of leased asset equipment. Entity ABC agrees to make at the end of the lease term. Okay, at the end. So first year end 20,000, second year 30,000, third year they are paying 50,000 in 3 years. For simplicity purpose, there are no other elements to the lease payments like purchase option, incentives or initial direct cost. Simple question. If those all are there, we need to calculate and include those things under right to use of asset. But here there are no things. Assume discount rate 12%, which is entity ABC's incremental borrowing rate, because initial in interest rate implicit in the lease cannot be readily determinable. जो भी 12% डिस्काउंट रेट है वो क्या है, इनिशियल बोरिंग का इंक्रीमेंटल बोरिंग कास्ट है लेसी के लिए. एंटिटी एबीसी depreciate the right to use asset on straight line basis over the lease term. ये भी बता दिए. How would entity ABC would account said lease under Ind AS 116? That is what they are asking. So first, in the solution, what we need to do? We need to make initial recognition, that is working note 1. What is your working note 1? Present value of lease payment. So I'll highlight this thing. Present value of lease payments, that is end of each year they are taking. That is how to calculate discount factor. Any आदत पड़ गई anyone in the class बोलने की. So how you will calculate discount factor? I said yesterday 100 divided by 100 divided by 100 plus rate of interest is how much? 12. So 112 into if you do, you will get for first year, equal to if you press for second year, again you press equal to for third year you will get. So whatever information is there, first we will write those things. So first year 1 2 3 years are there. Year end में हो रहा ना lease payments, they said at the end of the year, so we will consider that itself. So these lease payments are done at the end of the lease period. So end I'll write here end first, so that you can understand. Lease payments, first year 20,000 they are paying, so take 20,000. Second year 30,000 they are paying, so take 30,000. Third year they are paying 50,000. These are lease payments. Discount factor, how to calculate? I said in your calculator type 100 divided by 112. Those who are watching the video, just take out your notebook and you can also calculate the things. थोड़ा वीडियो पॉज करके अच्छा टेबल बना के आप भी कैलकुलेट कर सकते. तो फर्स्ट ईयर इट विल बी 0.8929. Second year, if you press equal to, will show what we need to do. 100 divided by 112 into first year value 0.8929, second year value 0.2, third year value 7 to 7 to third year equal to 7 sorry 0.7118, approximately 4 digits I have taken. So first year present value will be 20,000 into 0.89 equals to 17,858. Next second year 30,000 into 0.7972. I am using my calculator, you too can use. It is 23,916. At the end of third year you are paying 50,000. 50,000 into 0.7118, so it will be 35,590. So total present values will be 35,590 plus 23,916 plus 17,858. It becomes 77,364. This is your lease liability. Lease liability at the end of the 3 years. I'll highlight this one. Slowly we are doing, don't worry about anything. So at the end of the year, right to use of asset will be equal to your lease liability, because there are no initial direct cost and dismantling or restoration cost. So your right to use of asset will be equal to 77,364. 77,364 since no initial direct cost and dismantling or restoration cost. Okay, here we end the working note 2. For your understanding purpose, I wrote subsequent recognition. Here it is given at the end of each year they are making the lease payment. So lease liability table, working note 3, we are going to do. See, lease liability, lease rentals paid at the end of the year, opening balance, interest, lease payments, closing balance. This is how it will be done. So 1, 2, 3, 3 years are there. 1, 2, 3. Opening balance, whatever your lease liability is there, 77,364. So I'll write here at the beginning of the year 77,364. Interest will be calculated on this at the rate what percent they gave in the question. Interest at the rate 12%. So let us take that. interest at the rate, wait a minute, A into 12%. In this question it is 12%, so that is what we are taking, 12%. Interest at the rate, we'll adjust it later on. 77,000 into 12%, it is 9,084. Approximately we will take 9,284. Lease payments. Lease payments, every year we are paying how much? First year 20,000, second year 30,000, third year 50,000. So those lease payments we will take under column number C. Here it is 9,200. So first year it is 20,000, second year 30,000 we are paying, one more zero, third year 50,000. So from 77,364, if you deduct B 9,284, your closing balance for first year will be 68,080. This is first year end balance. Wait a minute, sorry, we did a small mistake. We need to add one thing and deduct one thing, sorry. From 77,364 plus interest 9284 minus 20,000. A plus B minus C equals to D. Here D will be A plus B minus C equals to D. So it is 66,648. How we got means opening balance plus interest minus lease payments. A plus B minus C equals to D. So next year whatever your closing balance will be there, that will become opening balance. That is, थोड़ा फास्ट कर लेंगे, यहाँ से समझ में आ गया ना. 66,648. On this we need to calculate 12% interest into 12%, that is approximately 7,998. So 66,648 plus 7,998 minus 30,000. Okay, will become 66,000 48 plus 7998 minus 30,000. Second year end closing balance 44,646. I am using calculator. This is how it will be. It is taking time. For typing it takes time. Yesterday in the video, that is why after typing I have explained. So 6, whatever your closing value is there, that will become opening value here, and on this we need to calculate 12%. Don't do like that, because it is the last year. This is our last year now. So last year at the end of the lease there should not be any closing balance. Here it should be nil. Here it should be nil. So whatever your 50,000 is there, that you will pay at the end of the year. So the difference between 50,000 and your opening balance will become your interest. Okay, so from 50,000 you deduct 44,646. Whatever value we are getting here, that will be balancing figure. Okay, 5,354. This is your balancing figure in this case. Don't calculate in the last year interest. Interest should not be calculated at the end of the last year. Okay, that should be taken as a balancing figure. This is your what? Balancing figure. So first year initially it will be recorded liabilities this much. Each year, first year, second year, at the end of the final year there will not be any liability. Similarly, we need to spread over the opening balance of right to use of asset. If anyone has any doubt, I'll explain it again. First, opening balance. To that we need to add interest, which is calculated on this opening balance itself, 12% given in the question. From that, first year lease payments 20,000 deduct, you will get closing balance. This closing balance will become opening balance for second year. From on this again we need to calculate interest, that is year. Add interest to the opening balance, then deduct your 30,000 payment, closing balance for second year. Closing balance for second year will become the opening balance for third year. At the end of the third year, you need to pay entire lease liability 50,000. From 50,000, you deduct the initial opening balance of lease liability. Difference will be taken as interest charges. Okay, at the end of the lease term, there will not be any more liability. Next, right to use of asset. Asset value is how much? 77,360. Depreciation. So first calculate the asset value. Directly also we can do. So right to use asset account, asset value we are seeing. Opening balance 77,364. Depreciation over the useful life of asset. So over the lease term, because asset has not been taken over by the assessee, lessee. Lessee is not taking the asset. So 77,364 divided by 3 you will get as 25,788. This is your depreciation. Okay, lease term is 3 years, so we are dividing it opening balance with 3. So from opening balance, if you deduct depreciation 25,788, there will be closing balance. Wait a minute. 77,364 divided by 3. Okay, 77,364 there will be closing balance of 51,576. That will be opening balance for next year. So next year 5 1 sorry 51,576. Depreciation each year SLML, so it will be 25,788. From 51,000, if you deduct 25,788, you will get balance, closing balance 25,788. Opening balance again 25,788. Depreciation for this year again SLM 25,788. So here closing balance will become nil. Okay, there will not be any, because asset is, lease period is over, asset is not appear in the books of accounts. So let us take this also bold. So everything looks alike. Depreciation calculation, I'll write here depreciation is equals to right of use divided by lease term. Right of use divided by lease term. Right of use 77,364 divided by 3 years. So 3 years. Depreciation for each year 25,788. Okay, 788. अच्छा 25,788. Okay, this is depreciation each year which we have got here. Okay. Next, general entries. This is major thing. Okay, first on commencement. Okay, do they give any dates in the question? No. So first we will write first year. In the date column we will write first year beginning. Okay, understand it as beginning. Initial measurement, working note 1. First year beginning, what happened? Initial measurement we did. What is that? Initial recognition, working note 1, 77,364 lease liability, and right of use of asset also same. So R O U ROU asset account debit to ROU asset account debit to or else ROU asset account debit to lease liability account. What is lease liability here? Amount 77,364 and right of use of asset account also 77,364. Okay, from where you got, you can check working note 1. In working note 1 it is given. Okay, this is at the beginning. Okay, being initial recognition made. Next, first year end. Okay, first year end, what is happening? First year end. What happened? First year end, we need to pay the interest. So interest account debit to lease liability account is the general entry that we need to write. For typing it is taking time. First year end. So what is the general entry? Interest account debit to lease liability account. Lease liability account. How much? Interest, first year interest 9,000. Go to the lease liability table, rentals table, here 9,284. So it will be 9,284. So here also 9,284. Next, being interest accrued. Being interest accrued. Next, first year end itself, we are paying some amount. For what? For using the asset we are paying the amount, so how much we are paying, that will be deducted. So lease liability lease liability account debit to bank. Lease liability account debit to bank. थोड़ा टाइम ले रहा, कीबोर्ड टाइप कर लेना. It's already 1 hour. See, I am not skipping anything here. I am writing each and everything so that you should understand everything. Lease liability account debit. First year you have paid 20,000. So 20,000 to bank account, because cash or amount is paid. So 20,000. So being lease rentals paid. लीज रेंटल पे कर दिए 20,000. नेक्स्ट सेम टाइम डिप्रिसिएशन इज देयर ऑन असेट. डिप्रिसिएशन अकाउंट डेबिट. डिप्रिसिएशन अकाउंट डेबिट टू depreciation account debit to right of use asset account, because asset value is decreasing due to depreciation. First year depreciation, how much? Every year depreciation is same, 25,788. So 788 to 25,788. So next क्या लिखते, being depreciation charge at the end of the lease period. At the end of the lease period, what is happening? These expenses should be transferred to P&L account. What are the expenses lessee is having? Will be transferred to profit and loss account. So profit and loss account debit to interest account. interest account to depreciation account. Interest 9,284, 9,284. Depreciation 25,788. Together 25,788 plus 92,084 will become 35,072. 35,072. Like this, second year end and third year end we need to write the journal entries, but with the different values because amounts will change, so those we need to take. Okay, so first we need to calculate initial. Here let me tell you one by one. Present value of lease payments. Year end payment is done, so present value factor we need to take. So 20,000 into present value, 30,000 into present value, 50,000 into present value. Calculate present value. 100 divided by 112 into first year equal to second year, again equal to third year. If you multiply these values you will get. If you add total lease liability you will get. Okay, as there is no initial direct cost, right to use asset value will be same. Okay, this value will be uh, spread over the useful life of asset like this. Okay, I'll show you one by one. So opening value is there on that 12%, this minus 20,000 closing value. Closing value will become opening value for next year. Again 12% you will calculate, you will add and you will deduct 30,000, you will get closing value. On closing value from 50,000, this is end of the year, this will become balancing figure. So don't calculate 12% directly. 50,000 minus 50,000 minus this is your balancing figure. So here ends the liability table. And next year, sorry, next right of use of asset. Okay, opening balance less depreciation, closing balance. How to get depreciation? Total value of asset divided by lease term, because lessee is not purchasing the asset, so lease term only we will take. So 77,364 divided by 3 years, 25,000 we are getting. From first year opening balance deduct value of depreciation, closing value you will get, that will become opening value. Again depreciation you deduct, straight line method, so closing value. From opening value deduct the current year depreciation, third year, this will be the nil at the end of the third year. So general entries, right to use of asset account to lease liability account in the initial, okay, initial recognition. Then interest at the end of first year, interest to lease liability 9,284. Next lease liability to bank 20,000 you have paid. Depreciation to right to use asset account, this is depreciation. These two are expenses, so will be transferred to P&L account, P&L account to interest account to depreciation together will be transferred to P&L account. Okay, till here no problem. Next 2 years similar entries will come. Just a minute, I'll show you. So here we can see the second year general entries. For the type, I have typed the information similar to first year, and whatever are there similar will be there. And okay, at the end of second year, interest account to lease liability. From interest lease liability table, you can see 7,998 is our interest for the second year, so that is taken, and we are paying in the end of the year 30,000. So depreciation SLM method, so every year it will be same. So 25,788, and lastly interest and depreciation being expenses will be transferred to interest. And so we are discussing how it will be recorded for the next years. So interest 7,988, then lease liability to bank account 30,000. Depreciation to right of use asset account to 25,788, straight line method same. Lastly profit and loss account debit to interest depreciation, interest 7,000 and 7,998, and depreciation 25,788, together 33,786 will be transferred to P&L account at the end of second year. At the end of third year, similar to earlier, again we need to write the general entries in the books for the interest, lease liability, interest account debit to lease liability, then lease liability to bank account 50,000, depreciation to right of use asset account. Lastly, P&L account debit to interest account to depreciation 5,354 plus 25,788, together 31,142. This is how general entries will be recorded for 3 years. Sometimes additional to general entries, he may also ask you to how it will be presented uh, in the financial statements. Okay, so what are your financial statements? Your financial statements will be P&L account sheet. Full information we don't have, we can prepare the extract of P&L account and balance sheet, that I will show you. So after general entries, the summary statement of lease contract, financial statements, how they will appear. Because we don't have entire balance sheet and P&L information, so only extract will be shown here. So let us see these things. See, first we did the working notes. Did the working notes, then general entries. Now a extract of financial statements. Okay, following is the summary said lease contract accounting particulars, initial at the end of first year, at the end of second year, at the end of third year. Okay, we need to show. So let us see the summary particulars: initial, first year end, second year end, and third year. Cash lease payments: initially we didn't pay anything, but at the end of first year you paid 20,000, at the end of second year you are paying 30,000, at the end of third year you will pay 50,000. Lease expenses to be recognized. Interest, we can see from the interest table. Okay, from the lease liability table, whatever interest is there, those will come here. Okay, here they are. You can see 9,000, 7,000 and 5,000, 9,284, 7,998 and 5,000. This will come there, and lease payments 20, 30, 50. Okay, these will be appearing in the financial statements. So it is an extract, not detail, but it is an extract, okay, of expenses. Interest depreciation is every year same: 25,788, 25,788, 25,788. Total period expenses, these two. See, I am saying it is an extract. Extract shows only those information which we are having. Okay, not full detailed P&L information. Next, in the balance sheet, this is asset and this is liability. So asset value, we are having right to use asset. At the initially we have recorded 77,364. From that you have paid to 20,000, and you have added 99,000 interest. So those, whatever in the lease liability table is there at the top, that we will get here. I'll show you, just a minute. And lease liability, every year whatever we are paying will come here. First year, second year and third year. So lease liability and right of use asset account are at the top. A little bit problem in this, थोड़ा मूव नहीं हो रहा. Here, right of use asset, right of use asset balance. Initial balance 77,000. Second year, first third year balances. And liability, this is initial, after initial balance, first year, second year, final year there will not be any value. Final year there will not be any value. So these values will come there in the answer. Let us see those things. So 77,364 second year, and final year right to use of asset. Third year there will not be any asset because lease term is over. At the end of third year there will not be any balance. Lease liability initially it is second year, first year end or second year beginning you can say, and second year this is your liability. At the end of third year there will not be any balance. Okay, here we are ending the answer. Hope you have understood the thing. uh, I didn't type this statement because uh, it is already 1 hour 20 minutes, so I don't want to increase the size of the video. So instead of typing from the our study material whatever is there answer, I have taken that one, so you can understand. uh, Typing takes lot of time. After watching this video you will understand, that is why I have avoiding typing. Whatever I am doing for 1 year and other years information similar if it is there, I am not showing to you. After typing it I am showing to you, understand? Okay, I don't want to increase the size of the video. So hope you have understood and prepare well, as there is very less time we are having. So lastly, but it is very important to you all, सीखना बन तो जीतना बन, सीखते रहो जीतने के लिए। जय हिंद।